This is our Forex blog for May 2nd, 2013. I've been pretty busy this week and haven't done them for the last few days. These are one of the easiest ways of trading because it lets you visually see what the trend is of each individual currency, and then basically, in a nutshell, you look to buy the strongest ones. Like you can see, the Australian is trending up very nicely today. Let's scroll this back, and you can see it during much of that time the Swiss is falling. And so the Australian Swiss is a very high probability one to be buying. Let's put that on here. And you can see, explosive move up. It's that simple. There's nothing more to it. Now, to get a little bit more advanced, you can use our other tools that are on these charts. And you can use the daily and weekly trend underneath it. You can look at it with our currency meter type of trend tool underneath it, which shows you the real-time statistical strength or weakness, the daily, weekly, monthly trend, and the chart. Now the chart tells you a ton of information. It tells you what the highest high was yesterday for the, in this case, dollar index, the euro index, and the lows, which are the dotted red. It also shows your upper and lower containment bands, which tend to contain price. As you can see, especially the 2.0 white band, when price gets underneath there, it tends to reverse. There's a big move up. When it gets down here, you don't want to trade with the trend anymore. You want to look for the momentum to slow down and look for a counter trend trade. Sometimes it goes up a little bit and trends down again. Other times it has huge reversals like the yen did today. You never know how many pips you're going to make or lose. However, your losses should always be small, and when a trade takes off and keeps going your way, you want to hang with it as long as it continues to trend. And you can just do very simple things such as, drawing trend lines on the chart to keep you into trades. You stick with the dollar long, especially when it went above its hourly moving average in gray here, and it's above the previous day's high at 8:30. It's a very high probability one to be buying. At 8:30, the yen was in a major down move. So if of these four pairs right here, at 8:30, you would want to be buying the dollar yen. Until about a little bit after 8:30, the yen starts to go back up. If the yen's going up and the dollar's also going up, whatever one's going up at a steeper pace is going to be the one that's trending. You never want to buy or sell two pairs that are going up at the same time. You want to basically be looking to buy. You can see at 8 o'clock the dollar's going up. So is the euro. The pound looks strong. At 8 o'clock, obviously the yen's going down from 8 to 8:30. The dollar yen is one of the better buys from those four pairs. If you only had to pick those four pairs, as you can see on the chart, 8 o'clock, just like I said, 8 to 8:30, boom. And anytime the perfect oscillator gets to or above 80 level, it's likely to reverse. So if you want to look for counter trend trades above our 2.0 band and ride it back down, it's a pretty high probability thing to do. Also, since this trend was up, when you get a minus 80 pullback on these, or even very close to it, these are pretty high probability areas to be buying as well. And you can see the first one took a little bit of time. It went down another 10-15 pips before it shot up 40 pips. You can look to scale into trades or use tick charts or range charts to improve your entry. Let's look at all 8 of them. And this is one of the higher probability ways. Trades that I consider high probability in any individual one. The Australian, the trend's down. It broke the previous day's low. The daily and weekly trend's down. Came back up to the previous day's low and found resistance. Couldn't get above it. So when it breaks down right here at 4, very high probability place to sell. The New Zealand also. The daily and weekly trend's down. It's kind of going into a nice little rectangle pattern right here, and it breaks down at 3:30 or 3:05 or so. Very high probability one to sell. The CAD, the daily and weekly trend's up. It's clearly going up. Breaks out above the previous day's high here at 2. It's a very high probability one to be buying. Same thing here with the pound at 2:30. Buy. So let's look at buying the pound versus in New Zealand, and at 3:30 the pound Australian. Very high probability, no-brainer type trades that most of the time are going to make you money. And not only that, but they're going to make you more money than than your risk is by many factors. 230 or let's go back and look at that real quick. Yeah, it was around 3 o'clock here. The pound's going up. The Australian has also been slowly going up. The trend's down. It's at a resistance area. It's starting to go down. A little bit after 3. And you can see on the chart here, a little bit after 3, you got a nice little consolidation in here. You got a pullback trade. Typically, I will wait for a pullback, and as soon as it breaks the trend line, I don't usually draw it on the charts, but you can eyeball it. When it breaks that trend line, you get long. You put your stop a few pips underneath the low, and this is what your risk is. And even if you got out of this trade, somewhere around here, you can see the win was bigger than what your risk was, and that's the only key to this trading. And you can see it went up this much. It went up probably 5 to 6 times more than what your risk is. That's the key to trading. The pound was very strong at that time. Let's take a look at some of the other ones that were weak. The New Zealand was as well. Pound New Zealand also 3 o'clock or so. Very high probability one. And the closer you buy it towards the hourly moving average, the better, because that means the upper bands are significantly farther away. At 3 o'clock, this one had a little pullback. This was kind of the high. Both these areas, found some resistance earlier. When you buy it right here, this is your risk. You don't know if it's going to break the high. It might even go up only a third to half of this distance. This one broke the high, and because the trend was strong, you might want to draw your fibs from this level right here. Gives you an idea of what your profit target is. Guess what? Very high probability you would have been long right here. Put your stop underneath here, and you can always get out of half the trade when it's kind of going sideways. Keep your stop underneath here in case it comes down, and then when it goes up above our bands, hits the fib target. In some cases when it's going up, it goes up very rapidly, and the perfect oscillator shows a plus 80 reading. In this case, it didn't, and in the first case, it wasn't even at or above the Bollinger Band, but the second time it was. Typically, price tends to reverse off the Bollinger Bands, especially when they're outside of the containment bands. If you notice, outside the containment bands here, we have the Bollinger Bands of the perfect oscillator being hit, and you can see reverses up, and notice this one right here, reverses up. When you have a trend that's down and it hits the upper bands of the perfect oscillator, it doesn't always work, but typically if you get into a trade, you might lose 5 or 6 pips here. You get in again, you make 20. And you got to get used to having losses as traders. You can't care if any individual trade works. It's only the series of 50 to 100 to a couple hundred trades that matters. If the system has more wins and losses, or more importantly, it has bigger wins and losses. If you're making 3 times bigger wins, $300 wins for every $100 loss. I mean, you can have 3 losses in a row and recover that with just 1 successful trade. That means you can be right 25% of the time and break even. So focus on that if you want to make trading profitable, if you want to make trading a career. You can't care about what happens on any given trade. Now, these fibs or these currency indexes, you can draw the fibs on a previous move, and when it gets up to a fib target, typically you're going to get a reversal. So you kind of know when most of the pound pairs are going to reverse ahead of time. You also know when you have a strong trend like this and it pulls back to 50 or 62%, when the trend's likely to continue. So this is a good continuation up. This is a great place to get out of all your pound pair buys and look for counter trend trades. You don't know if it's going to continue down this far. Usually it pulls back a little bit or to the hourly and finds support and goes back up again. But if you're in a trade and it just keeps going and going, you stay with it. So let's look at 7 o'clock buys in the pound and 9 o'clock sells in the pound pairs. At 7:30 or so, which one was the weakest? Well, the Swiss is underneath the hourly. It was never able to get over its high. The euro was going down at that time. Even the dollar which was above its hourly all day, kind of just broke down and was going sideways underneath there. So you could actually at 7:30 look for pound dollar buys, which a lot of people like to trade the pound dollar. Here's 7:30. Now, obviously, not all trades are going to be super big, 30 to 50 pip wins. 7:30, this one had pulled back, and it's better on a range chart or a tick chart, but let's just assume you're long somewhere around 65, went up to 85. This is a 20 pip move. Let's take a look at the range chart at that time. We'll put on the pound dollar. And looking at a 5 pips per bar range chart usually can improve your odds. You'll have a smaller risk, and it also lets you usually capture more pips. So here's 7:30 approximately on the chart. You have about a 10-15 pip pullback. You might go long when it goes 1 pip above this range bar's high. And guess what? You got stopped out, 6-7 pip loss. Comes down again. And especially on range charts, 3 to 5 bar pullbacks followed by 1 green bar. When it goes 1 pip above the high, you're long. Your stop's right here, and you can see it kind of went up and went sideways. You might have got out of your trade right here. But if you look at what you lost on the first trade versus what you made on the second trade has, you know, a little over 2.5 times bigger win than what you lost, and that's really the key to trading. Now, to end today's class, remember, 9 o'clock we're looking for sells in the pound. Which one's likely to reverse up at 9 o'clock? Well, the dollar's already trending up at 9. The Australian and New Zealand are trending up at 9. So we can take a lot of trades at 9 o'clock. We can look to, I'm going to make this bigger here. We can look at 9 o'clock for pound dollar buys. I'm sorry, pound dollar sells, because the pound's likely to go down. Here's 9 o'clock. You can see it fell 60 pips. We'll look at the pound Australian, 9 o'clock. 9 o'clock. Guess what? It broke down right here and fell about 70 pips. Pretty straight down. Pound New Zealand, because the New Zealand is going up and trending up. 9 o'clock. Is right here. Notice this hit a fib target on the last wave, double topped up there. The only downside of this trade is the perfect oscillator didn't, actually the perfect oscillator was very close to at 9 o'clock, the 80 level. So this was an amazing trade here that you could just sell the double top because it was really at an extreme at that time, and all the indexes set it up, and this was an astronomically big 120 pip drop. Even if you got a third of that, 40 pips, risking, you know, less than 10. That's the key to trading. And so, you know, anybody who focuses on small losses and huge wins and doesn't worry about winning percentage as much, as you see from most of our tools today, a very high percentage of the time they do work, but you will have losses. And if there are, you know, 3 to 12 pips and your wins are 20 to 30 or more, or even if you have 5 or 6 pip losses and 12 pip wins, you're going to make money. It's that simple. It's pure, simple, second or third grade math.